What if I told you that while you were debating where to park your savings, the most powerful governments on the planet were quietly stacking gold at the fastest pace in over 50 years? Not your grandpa's coin collection. I'm talking hundreds of tons. Every single year. And here's the wild part. A lot of it isn't even being reported. This is Finance Untold. And today we're breaking down the global gold race that almost nobody's talking about. Stick with me, because by the end of this, you'll see why 2027 could flip the entire financial system on its head. All right, before we get into who's buying, let's talk about why this is happening. For decades, the US dollar was king. Countries stacked dollars, held US treasuries, and felt secure. But around 2022, that confidence started cracking. Geopolitical tension, inflation that wouldn't slow down. And then the big moment, when the US froze Russia's $300 billion in reserves after the Ukraine invasion. That move sent a message to every central bank in the world. If it can happen to Russia, it can happen to anyone. So what do when you stop trusting paper? You move to something real. You move to gold. Central banks bought over 1,000 tons of gold in both 2022 and 2023. That's the highest level in more than half a century. Even in 2025, with prices already soaring, they still added over 860 tons. That's not random. That's coordinated behavior. Now let's talk about who's actually doing the buying. China is leading the charge. Their official reserves are over 2,300 tons now, up sharply in just a few years. But many analysts believe the real number is much higher. At the same time, China has been reducing its US Treasury holdings. The strategy is clear. Less dependence on the dollar, more control through real assets. Then you've got Poland. Not the first country that comes to mind, but they've been aggressively stacking gold. They added over 80 tons in 2025 alone and now hold more than 500 tons. Their central bank openly said they want gold to make up 30% of their reserves. India is another major player. The Reserve Bank of India significantly increased its purchases. And in 2024, they brought 100 tons of gold back home from the Bank of England. That was the first time since 1991 when a country starts physically moving gold back within its borders. That's not symbolic, that's strategic. Turkey has also been buying heavily. With inflation and currency instability hitting hard, gold becomes a safety net. When your currency weakens, gold holds the line. Then there are countries like Kazakhstan and Azerbaijan, not always in the spotlight, but they've been quietly adding tons to their reserves. Energy-rich nations are starting to shift away from dollar-based strategies. And it doesn't stop there. Brazil, Indonesia, Serbia, Ghana. Smaller purchases, but the pattern is the same. Emerging economies are making a unified move toward real assets. Now here's where things get even more interesting. A huge portion of these gold purchases isn't even being officially reported. In 2022, analysts estimated that about 2/3 of central bank gold buying never showed up in official data. That means what you see publicly is only part of the story. Countries like China and Russia are believed to be buying quietly, without announcing it. Because if you reveal your strategy, you move the market and attract attention. Staying silent lets them accumulate without disruption. This creates something called hidden demand. And it matters because it tightens supply without most people realizing it. It's one of the key reasons gold prices pushed past $3,000 per ounce in 2025 and kept climbing. Now let's connect this to 2027. A lot of this buying started accelerating around 2022 and 2023. Historically, these kinds of central bank cycles run for about 5 to 7 years. That puts us right in the window where something bigger could happen. There's growing discussion about changes to the global financial system. Not necessarily a return to the gold standard, but a shift where gold plays a bigger role in trade and reserves. This could come through BRICS cooperation, bilateral agreements, or new financial frameworks. We're already seeing the early stages. It's just moving slowly enough that most people aren't paying attention. So what does all of this mean for you? It means more than you think. When the biggest financial players in the world all start moving in the same direction, it's not random. It's a signal. I'm not saying go all in on gold. That's not smart, and that's not how serious investors think. But ignoring the shift would be a mistake. If global systems start leaning even slightly toward gold-backed value, the dollar could face pressure. That affects purchasing power. It affects savings. It affects everyday costs. Right now, gold still makes up a relatively small portion of reserves for many countries. But the trend is changing, and it's being led by fast-growing economies. The message is simple. Real assets are becoming more important. Paper promises are becoming less trusted. Understanding that shift puts you ahead of most people. So here's the bottom line. There is a global gold race happening right now. China is playing long-term. Poland is stacking aggressively. India is bringing gold back home. Emerging economies are quietly moving away from the dollar. And a massive portion of it is happening behind the scenes. The shift is real. The only question is whether you notice it early or realize it too late. If this made you think, hit that like button so more people see it. Subscribe to Finance Untold for more deep dives like this every week. Drop a comment and tell me what you think. Is gold about to play a bigger role in the global system by 2027? And if you want to go deeper, check out the next video on how BRICS countries are building alternatives to the dollar. I'll see you in the next one. Stay sharp.